Welcome back, folks. This is Greg Silverman for another Come Learn With Me session. Happy Thanksgiving weekend. If you're glad you're not a turkey, I am. I'm not a turkey. Okay. Article that's been rated and ranked. It's actually one that's close to my heart. I've been very involved in the alternative industry for many years, and there's always been a hunger for more data. So I'm curious to see what is exposed. And this is an article that was liked by all of you. If you want to hear more about our investment program, stick around till the end of this video and I will flash a URL. I'm not sure where it's going to go, so you'll have to stick around, and where you can get more details on our investment side of our videos. Okay, new applications of alternative data in private equity. What did they say? They said data is the new oil, right? This blog is based on a webcast hosted by a partnership with CAIA Association, of which I am a CAIA, where Eagle Alpha, and I know those guys, spoke alongside strategic partners 140 about using alternative data for deal origination and due diligence. You can access part 1 of the topic of implementing a data strategy here, or part 2 on sourcing for PE funds here. All right. Well, let's just get into the meat. If we take a look at the main themes that have stood out across the entire global landscape, it is difficult to deny that COVID-19 has been an overreaching theme for the past year. Looking beyond this, there are a number of themes that apply to private equity companies who are interested in alternative data. 1, increased interest in alternative data. There's been a 5 times increase in private equity attendees from both senior and executives and data science roles. I guess there must be an increase in what? In their webinars? Efficiency focus. Since the data is needed for yesterday for PE firms, the focus is on accessing the data, reviewing it quickly, and implementing it in the process. Okay, so this is a summary from what Eagle Alpha is seeing happening regarding their data. Data is an asset. Didn't I say that? PE firm Blackstone brought a spotlight to the idea that your data may be worth more than your company, and how they were looking to monetize the data of their portfolio companies. Corporates and PE firms are now more aware of this and wanting to tap into this revenue stream. Vendor innovation. Data vendors have been used to working with asset managers, but are now tailoring their data to suit PE and corporates, as well as creating technology and dashboards to improve the overall buyer's experience. ESG explosion. PE firms are becoming more aware that positive ESG activities can lead to the successful long-term success of companies. Regulatory scrutiny. Legal and compliance teams are busier than ever with the ever-evolving regulations surrounding data. Pertinent regulatory buzzwords include personally identifiable information, data governance, user content, data overcollection, and data privacy. All right, let's get into each of these, I guess. Okay, data supply growth. Growth of data supply accelerated from 35% in 2019 to 45% in 2020, with the fastest growing categories being consumer transaction data, expert views, and ESG. Private equity companies looking to monetize their portfolio companies' data had an effect on this growth. Data demand growth. Even though growth in alt data spend reached 1.71 billion in 2020, for many firms, alternative data is in its infancy, with 55% of funds not using alternative data, according to the Bank of America Global Fund Survey 2020. Similar to fundamental funds, private equity data sets on average are being priced around 33K per data set, according to an Eagle Alpha study. There you go. As mentioned previously, data vendors are being more flexible to buyers that might not want to subscribe to an annual license. To learn more. Alternative data use cases for private equity. Dominant applications of alternative data for private equity firms include new opportunities, risk mitigation, and peer comparison at a portfolio company level. Originally, interest in alternative data began when companies wanted additional information around digital market spend comparisons and also reputation and social media review comparisons. Nowadays, private equity companies want to know more about market size, share, and growth opportunities in new verticals, go-to-market strategies, or international local markets. COVID-19 upticks overarching questions around digital migration and digital transformation. So it just got me thinking how I guess you can get an information advantage in this market. Alternative data can provide unique insights around market analysis, deal origination, pre-due diligence opportunity, and the qualification, disqualification process, and commercial due diligence. Some of the most popular data categories for private equity we are seeing include event detection, is it the right time to engage? B2B, employment, job postings in LinkedIn, consumer traction, sentiment, consumer employee, web crawl data, competitive intelligence. Private equity deal sourcing teams are using a lot of internal data sources such as CRMs and management info data. This might include location, industry, revenue, EBITDA, number of customers. However, the true value add comes when combining this internal data with external data sources, allowing private equity firms to sort, filter, analyze, and discover new investment targets or the correct time to speak with them to speak, or to see if the companies are lying to you. You can now kind of triangulate the data, I guess. Some real world examples. Tracking employment growth through job postings data or LinkedIn data can provide information on overall employee growth, titles that are being hired, expanding sales teams, revenue growth indication, hiring for new departments like data science. Using Google search trends to track the interest in product, service, and brands, you can analyze the volume of search terms by state, understand brand and category perception, and roll out of interest on a state-by-state level. For B2B, there are data sets that use billions of publicly available data points that show what types of technology companies are using. This can provide insights into which technologies are growing and how they stack up against competitors. It's interesting. According to Fleur Hicks, CEO of Info140, alternative data can also provide additional information to market demand, market capture effectiveness, customer engagement and retention, audience cohorts, and NPS, and pricing and conversion. The data can be integrated throughout the full PE lifecycle from transaction through value enhancement to sale. Cultural challenges in private equity alternative data adoption. Private equity has been very successful using current processes and diligence activities for so long. So many professionals believe that it will be difficult to transition from an already working system. For this to work, the project would need buy-in from both the senior sponsor as well as a junior executive on the ground who understands the benefits of alt data that might not be tangible benefits, i.e. efficiency gains rather than searching through LinkedIn for employment stats, additional perspective, competitive. Many firms are making a move to data-driven decision-making, and if so, private equity firms wait too long to adopt this mentality, they will be left behind. ESG and private equity. Private equity companies are becoming much more conscious around ESG, as described in alternative data themes we have seen. Environmental data around climate change, air, water pollution, and deforestation issues, satellite and weather data, while waste management and energy efficiency issues can be seen through satellite data, trade data, even event detection data. Social data that looks at customer satisfaction, gender diversity, human rights, and labor standards is shown in employment data, employee reviews, Glassdoor, through customer or employee sentiment, and social media data. Governance. Topics around board composition and executive compensation can be assessed through employment data, public filings, web crawl data, sentiment data, and expert views. Nothing's private anymore, folks. It's all out there. Final thoughts about data ethics. Legal and compliance teams are growing across firms, especially hiring for expertise in the realm of data, especially for private equity companies that want to use data from their portfolio companies. If PE companies are using personal data or web crawl data, the advice is to exercise caution and take into consideration GDPR, CCPA. I think that's that's that privacy data rules. Legal and compliance teams are important for this process, or even an ethics committee is, if possible, to run through following any legal screening. For any outsourced data providers, it can be assumed that the data is legally compliant. The lines are becoming blurred between traditional data and alternative data, and companies will eventually be using both interchangeably under the term data. Information really is a competitive advantage. Oh, there you go, folks. Yeah, Eagle Alpha. They've been around for a while, so they seem to be doing a good job. All right, well, I hope you enjoyed that. Data is the new oil, as they say in Silicon Valley. All right, guys, Greg Silverman. I told you about our investment process. Come check us out at this website. where you can learn more about our process, our philosophy, and the opportunities that we're looking at right now. So thanks for joining. Come join us again with another Come Learn with me. Greg Silverman, out.